Hey everyone, Kyle here with another Tax Talk Tuesday update, and this time I wanted to circle back to the CARES Act that was passed at the end of March. You may remember at that time there was a whole lot of focus on the stimulus checks that went out to different individuals and the Paycheck Protection Program that provided those loans, the forgivable loans to certain businesses. But of course, not every business received one of those loans at the time. If you're one of those businesses, though, that doesn't mean that there might not be some additional CARES Act provisions that would be helpful to you. And so I wanted to touch today on what's called the Employee Retention Credit. This credit is what's called a fully refundable tax credit, and it was created by the CARES Act. And what it does is it allows an eligible employer to receive a credit for qualified wages that are paid after March 12th of this year until the end of this year, December 31st. This credit is limited to 50% of $10,000 of qualified wages, so you can tell there's some steps to getting here. But what that means is that there's a maximum credit of $5,000. So naturally, those aren't quite, the numbers may not be quite as big as some of the PPP loan amounts that we saw in the past. But for businesses that suffered a loss during the pandemic, every dollar counts. So how are you eligible for this credit? So an eligible employer with this employee retention credit is an employer that fully or partially suspended operations during any calendar quarter in 2020, or one that experienced a significant decline in gross receipts during a calendar quarter. And that's going to be defined as you had less than 50% of the revenues that you had in the same quarter of last year. But one other qualification for taking this employee retention credit is going to be that you did not receive a PPP loan under the CARES Act. So in that case, if you meet those conditions, you either had to fully or partially suspend your operations, or you experienced a significant decline in revenues and you did not receive a PPP loan, you're eligible for this credit. And because this credit is fully refundable, this means that any amount of the credit that exceeds your your taxes that are owed, that's going to be refundable to you. And so benefit there for sure, either puts cash back in your pocket or it offsets some of your employment taxes. And during these trying times, if you were not a recipient of a PPP loan, we're going to encourage you to check with your accountant to determine whether this credit might be applicable to you. There's a couple different reasons for this. I know that you wouldn't be filing 2020 taxes until next year, but if this credit is applicable to you, you can, in anticipation of receiving the credit, go ahead and reduce your federal employment tax deposits that are being made, or you can even request an advance payment of the employee retention credit for any amounts that aren't covered by the reduction in deposits. So that may not apply for everyone, but definitely worth checking out. Of course, as always, if you have any questions, feel free to email or call us. We're happy to try and point you in the right direction. And otherwise, we always hope you stay safe and hope you have a great Tuesday. Thanks.